Hey, good morning, everybody. Happy 5th of July! Woohoo! Yeah. Hope you had a nice weekend. Hope you had a nice long weekend. The sounds of freedom. So, let's see. Lots going on. Carney's still trying to save the pound. Great. Fine. Other than that, besides the pound, what else is there? I don't know. Dollar's relatively strong. Yen's even stronger. Pound's weaker than everything on the planet. Hey, well, that gives us something to do. Everybody had their eyes on Australia. Maybe they were going to cut. They didn't. So anyways, without further ado, let's get going. It's the 5th of July, 2016. It's 7:30 in the morning, New York time, which is approximately London lunch. Let's get ready for another trading day, huh? Just remember, life is good when we trade together. Forex.Today. Life is beautiful. Yeah, awesome. I love starting out the day like that. Well, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We offer traders multiple different asset classes besides foreign exchange, but also you can customize your trading account the way that you want. Your way at TradersWay with TradersWay. So at ECN, fixed or variable spreads, whatever you want, baby, we got it for you. We do these sessions, like I said, 7:30 in the morning, New York time, approximately London lunch, Monday through Thursday, here at Forex.Today. Registration is free. Come on by. Every Friday, I'm at FXStreet.com, where I do premium member webinars. And FX Street and you have given me the honor of Forex Speaker of the Year. So I appreciate that and your loyalty. I really do. All right, moving to the charts. If you take a look here, pound dollar is down 1% today. So we could say, well, that might be pound weakness. It might be dollar strength. So then, let's test the dollar strength idea. We could look at USD yen. USD yen is down 0.73, right? So basically 0.75. So dollars is stronger than pound by 1%, but yen is even stronger than the dollar by almost 1%, right? So that means if you look at pound yen, it's down almost 2% today. And that's a great example of relative strength, or doing a relative strength exercise. Aussie versus US dollar is down 0.63%. So Aussie yen must be down even more. Aussie yen is down 1.39%. Cool. Any particular reason Aussie is down at the moment? Or as they say in France, at the moment? Trade balance, hung parliament, commodities down, elections. Gee whiz, you guys are awesome. Those are all great answers. Yeah, Roger says, you know, the rate announcement, that would have been the one I said, but all the other ones sound pretty good too. Holy smokes. Yeah, they could have cut interest rates, and they didn't. So it's funny, right? Because if you read the textbook, it says, well, if they cut interest rates, that's going to weaken the Aussie. But in this case, it would have strengthened the Aussie in the sense that it would have been a battle cry for improving the economy or something. But anyway, so that didn't happen. So status quo, time to take some profit, right? So there was a lot of people hoping that, you know, the Reserve Bank of Australia would cut interest rates, and maybe at the same time, maybe Japan would intervene. No dice yet. So what could we look at for, for intervention? No, I mean what currency pair? And to answer that, I'd probably I would go with the USD yen, because I believe USD yen and psychological levels are going to be important on this one. So if we're down at like 95 or something, that could be an issue, right? So I'm going to mark this low off of Brexit. Remember, I had this at 99, and the low was 98.87. I was in at 99.0. Holy smokes. Funny thing about that story is 3 minutes later, I was up like 200 pips. Like, wow. All right. So it's kind of like trying to catch a cannonball, huh? Joseph says 90. Yeah, okay. Well, just, down is going to be the issue, right? So, when we get down past even just lower than 99 is going to be like red alert. That's when you really take notice, okay? So we're in this risk-off mood. I'm okay with risk-off mood. We're in July now. This is where, we shoot at rabbits. Just relax, man. Don't try for too much. Don't be too clever, right? Don't try to impress anybody. Miles says, at what level is BOJ going to enter? Well, that's what we just talked about 10 seconds ago. What level? I don't know. What am I, like hanging out with Abe and Kuroda? What's up, Abe? Right? No, I mean, so I don't know. What the hell would I know? But getting below 99 would be the big red alert. Okay. Miles says, I thought 100 would be a big psych level. Yeah, but we've already been through that. Now it's not a big deal. We've already been there. Like I said, just 2 weeks ago, I was long at 99 and then long again at 100. We've already been there. We already tested all of that, right? But if it gets worse than that, oy vey, that's going to be a problem. So even 95, 94, that kind of stuff is, and really another interesting part of central bank intervention is it usually isn't just extreme price, but extreme velocity. So if we broke through 99 and all of a sudden it went 98, 97, 96 because it just looks like, the end of the world, they may jump in. But, it's not the end of the world yet. We're basically at 102 on our way down to 101. Not a problem. Okay, I wouldn't start like betting the farm that it's going to double bottom. No. But you have to decide, I suppose, now, do you want to be long this? Is that something you want to do? And then the second question is, well, at what price would you consider being long? And why is that support? So you might say, well, we got 101.50 as the weekly support pivot. Aight. Okay. Weekly M1, weekly S2 pivot profit zone is around 101. Okay. And then even lower, down 100.5. So look, Every 50 pips, it seems to be support. And then the real clever one is 99, which means you got to get 100 pips below 100. So according to this, there's not that much support at the psych level of 100,000. You can change template a little bit, and how about this one? Okay. Okay. Where do you find the support here? Well, 95, which I've already mentioned. 95, right? Just kind of pointing out, wink, wink, nudge. And the next one's 92 and a half. So if you're using monthlies, I should get my drawing tool going here. If you're using monthlies, you're looking at that, 92 and a half to 95. So really, if you dip below 95, that's going to be your new green zone, right? So let's see, color green, that's the green zone for the month of July. All right, so you'd have to do something like this, and then if you hit 95, you might just find it here, and you'll say to yourself, I wonder if that's an intervention. Now, do you have a plan? Like, what are you going to do if you miss intervention and you look at it and you're like, oh no, it jumped 400 pips in 1 minute? What are you going to do? Are you going to buy a dip or sell it off the top? Or are you going to do nothing? You should probably write it down, like think about it. Write it down and make a commitment before you make an emotional reaction. Oh, okay, Miles says intervention cannot. Whoa. Who said anything about it working? Interventions never worked, ever. Right? When the Central Bank of Troy intervened, that didn't work. Right? And Greece is still trying to recover. Yeah, so it's not a matter of working, it's a matter of trading. Okay? So, I don't know, just for fun. Like, even if you're not going around, or you're not around 24 hours a day and all that kind of stuff, that's fine. There's a reasonable assumption of maybe some Japanese intervention, right? Okay, great, fine. Is it likely to be today? No, probably not. This week? Yeah, probably not, right? Unless the pig just completely crashes again and, all that kind of stuff. But probably not. But it doesn't matter. So write it down on a piece of paper, maybe 2 or 3 contingency plans. One, what type of scenario would you buy? And assuming you've missed it, not ahead of time, after intervention. Are you going to buy a dip? Right? Are you going to fade it off the top and sell it back down? Because you could say, well, central bank policy never works. So, or are you going to not trade the yen at all? Whatever. And then write it down. What would you like to do? What if it was a newsletter to your clients? Dear clients, right? You may be hearing rumors about central banking intervention by the Bank of Japan. And just to let you know, we have contingency plans for this scenario. Okay? That sounds pretty professional, doesn't it? So do that. See, just write it down. Then therefore, when it happens, you won't be so shocked. All right, so let's move on.com. So there's the support. Do you see the cluster, however? Let me drop into this 60-minute. Where is the cluster support for the first week of July? Yeah, well, you can give me a number. Come on, guys. 101. So I would mark that as a potentially important level for this currency pair. Okay. So is anyone going to post a trade plan on Forex.Today? Anyone going to do that for USD yen? Okay. And you will want to note at some level, at least, even if you're a bear, it's fine. But you should note somewhere that the weekly support, monthly support cluster is around 101. And that could be important. And that could be an opportunity to take profit, or it may be an opportunity to go long and kind of play this almost like a double bottom. Even though this wick hundreds of pips lower, you know, that was the craziness of volatility. Okay? And if you did think 100 is going to be a psych level, then this is sort of defending that, right? Maybe it comes down a little more, maybe then it comes back up, so on and so forth. But you're going to want to highlight that and say that's 101 is statistically important this week, more so than 100, right? Right? So there you go. All right. Well, thank you for doing that with me. How about our friend the USD, Euro USD? Pretty sideways at the moment. And the cluster here, the cluster, we have a central pivot in there and a weekly pivot, and the gosh darn chicken laid a, you know, a horrible, disgusting egg. Oh, by the way, you know, things that you need to do at least once in your life. I saw the most amazing thing over the weekend. Now, I've been around this world and I've done a few things, good and bad. Well, this weekend I saw a chicken eat a banana. And I said, well, we'll be. Look at that. There's a first for everything. I saw actually 2 chickens and a rooster fight over a banana. And I thought, well, there's the new nation's pastime. So anyways, Euro USD stuck up there. Yeah. All right, so I don't know. I'm waiting for it to either go up or go down, but one way or the other. Right now, down would be great. If not, I'm fine with that too. All right, so someone mentioned commodities and commodity currencies, right? I asked about the Aussie dollar, and you're like, oh, commodities. All right, well, what about commodities? This is a yellow gold. And so far, you know, we have it going up to 1384.42. Now that analysis is from last week, so we have to look at it and say, is it still valid? You know, I don't see why not. Right? It seems all right to me, right? So it spiked on the Brexit. It came down 50% into a roll reversal. And so I have it coming up to the 121.4, which is a monthly R1. I mean, it could go a little higher, but you know, that's the conservative target. And so maybe this goes up a little higher and tickles 1415 actually. But so I would say 1400 would be the real target. But the conservative one is going to be the cluster of a fib extension off of the retracement into the monthly R1. Okay. And what would support gold going up? What's happening globally to support gold going up? Well, it wouldn't be NERP per se. What is it? You got everything except the first letter right, Sally. It's not NERP. NERP, no, it's ZERP. Or NERP, oh, negative, oh, I see that way. Okay, negative interest rate. You know, okay, I'll go their way. Yeah, sorry, maybe it was a brain fart on mine. Yeah, no, you're totally right. You got it. My bad. Yeah, so negative interest rate policy. Yeah. And that'll likely to continue. And then, of course, right, of course, things like the Bank of England adjusting for its Brexit and easing and all that kind of stuff. So, yeah, sure. Sure. But also, just remember what I've taught you about July. I mean, you've probably, some of you have hung out with me for 4, 5, 6 years, some of you. And, you know, I treat July the same way. You know, it's going to be more up and down and sideways than anything. And so if you're at some sort of level of resistance, it's probably going to hold. You know, I wouldn't expect in July for commodity currencies just to rally straight up and, you know, go ape crazy. So if it's been elevated for a while, yeah, it'll come down for a while. You know, like just have this like dumb everything down, just kind of relax idea, right? Now the big, you know, unique thing obviously is the pound, but everything else, if it's going to go up, it'll go up for a while, and then it'll hit hardcore resistance, and then it'll come down for a while, but it's not going to crash, you know. But support will probably hold, resistance will probably hold, and just, you know, be cool with it, right? So, so gold is going up. Curious thing is Aussie's coming down, huh? Which means it's not, right? It's not commodity related. It's policy related. All right, so here's a friend, oil. I have oil coming down. So here we are. We came up, tickled 50, dropped, came up, tickled 49.5. Both of these levels have actually been pre-established as resistance by us, not by pivot points or anything else. Those are just two areas. If you're a bear, these are the areas you should consider shorting. And so the first one held, second one held, everything's fine, lower low, lower high. Did you guys do the rig count? Right, remember that was Friday, right? So I told you to watch it. Like I tell you Wednesdays. Oh, where did it go? Hang on. And come on, man. There we go. All right. Just trying to get it down to only one screen. All right. So the rig count went up 10 rigs. 10. 10. That's a lot of rigs, guys. So, what did oil do today? Down, down, down in a burning ring, right? I mean, boom. That was given to you on a silver platter. And on Friday at FX Street, I actually went through and we did some pretty specific stuff. We went through the Energy Information Agency data on oil inventories. And then we went through the Baker Hughes rig count report and all that in preparation for oil falling. And oil fell. So you're welcome. You are so welcome. What are you going to do with all that money? So look at that, guys. It dropped from 49.50 to 48. Buck 50, you know, that's real money eventually, right? And this is set the WTI. What would that be? A futures price? I have it over here. I have it indicated that it's down 2.46 to 47.83. So it's set to drop another buck, or that at least that's the spread, maybe. But down 2.46. That, you know, 2.5%. That's a pretty down day, right? By the way, Hang Seng down 1.5% out of Hong Kong. So Hong Kong down 1.5%. DAX down 1.5%. The French down 1.25%. Wowzer, huh? So very interesting stuff. That's going to impact the USD Kitty Cat if it's trading based on that data. Now remember, Australia is not trading on such correlations. Okay, so oil's fallen all day, and look what Kitty Cat's done. So it seems to me that correlation is positive. Aussie's clearly moving on what people would expect, you know, disappointment from the RBA. And CAD is not. Okay. Oh. So do you have a trade plan on this sucker? Boop. Do you think someone played the monthly central, or is that a coincidence? So you can measure it this way, or you can measure it this way. So you have to decide if it doesn't come all the way back to 29, if it only comes down to 29.10, you know, what are you going to do? Right? Yeah. Going on in there. Okay. So here's the big test, right? Now you got to wait, and maybe it doesn't come back. Well, it's not your problem. Okay. And then, of course, probably just take you up here, right? So a 382 predicts a 1618. Let's just call that the weekly central. And you play the monthly, weekly central. And maybe that's your range, and then back down. Okay. It's not a lot of pips, but that's what it is. Okay. What's the other way of measuring it? Oh, if you do it this way, then you're going to want it to have come down more. Okay, so you're looking at a 786 retracement off of this move, right? It's really this one now I'm measuring. I'm going to take it off this old roll reversal. So either way, it's going to be, you know, somewhere between 29.10 and 28.95. Like, you know, it's all the same to me. I really don't care. But usually what happens is you break above a psych level from below, and what you want to do is catch a return back to the psych level. And ideally you stay above the psych level. You know, like 0.0 would be great. But it still is, you know, depending on the setup, you know, all the way down to 80 is still fair game. 0.0 to 80 would be the buy zone. And that would fit that process, right? So that is moving in correlation with commodity prices, right? So this is coming down. I got a zigzag on here. I don't know, that's probably confusing, huh? Let me get rid of the zigzag. Boom. Okay. And so, as you can see, the way that I see this move is that's a low into this support. But the upside of this is a daily 21. Okay, so you have to have this already identified as resistance. If you're using a daily chart, it's just no brainer, absolutely no discussion, no even thought process necessary beyond the fact that you know, that's just a big deal. That's the 4-hour 21, right? And so this, I see that as retracement, lower high scenario. Maybe not on the spike, but definitely after the spike. The green, remember this was green for most of that candle, and then it ended red. Clearly a sign that somebody dropped this like it was hot as a double top, right? And then now it's sell, 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 and you know, one on the pullback, one on the break low, and it should be, you know, it should be down until otherwise. Now, if you're using a daily chart, it's as low as you want it to go. Well, you know, it's funny. I'm looking at Aussie yen and talking Aussie dollar. It doesn't matter to me. It doesn't. You make a big deal of it. All right, so I'm looking over here talking about moving averages and stuff, but whatever. It's all the same. Aussie's. If you think Aussie's coming down, you set it up to sell. I mean, that's really what it comes down to, right? And that is the message I give day in and day out. What is it that you think it's going to do? Versus you trying to trade reactionary to what has happened, right? It's more like, look, you know, you obviously read what the RBA said. That goes without saying. You're obviously in tune to the Reserve Bank of Australia, and you see the price action resulting from this information, and you're setting up trades based on your bullishness or your bearishness, right? The rest is just, you know, what moving average and what pivot point and, you know, what candlestick formation. you know, all of that is important, but not as nearly as important that you've made a decision. A logical, intelligent decision, right? The rest is like whatever you want it to believe. Because at that point, we have confirmation bias. So by definition, once you've made a decision, you have a bias, which means you don't see clearly anymore. But that's an okay thing, right? It's when you trade and you don't see anything. You know, I don't know what's going on, but I'm going to trade 10 or 15 times today, right? That usually doesn't work out very well, especially if you're like short and then you're long and then you're short again and then you're long again, and you're just all over the place, right? Just a total mess, right? It's like putting on your lipstick while you're driving a 4x4, right? No, so I guess the confirmation bias probably works for you, because you'll freak out when you start losing money when it's doing the opposite of what you think. You want a filter, right? Versus like you're just wide open. You're like, I don't get any of this. This is all just random and noise, right? Well, if you think that's true, right, you should just read 25 books from successful traders and then go teach a college course on foreign exchange. And you can tell people it's all random and it's all noise. We have models to describe this. Interest rate differentials. If this interest rate is higher than this other interest rate, money is going to flow to it. Yeah, except, you know, that may be true much of the time, but it's not what's happening now, right? So anyways, I would rather you be biased. Even if you completely disagree with me, I'd rather you have a bias and something that we could discuss intellectually, maybe even argue over. And you say, man, this is coming down. You know, as long as it's making lower lows and lower highs, I'm firing for effect. Okay? That's what it's all about. So anyways, we'll see if this continues down further, and if so, I'll be happy, right? Whatever. So let's go through the calendar and see what else we got going. Okay, let's go here. Do I need to log in? Probably not. We'll see. By the way, thank you guys. I see more and more sharing and caring. You guys are collaborating together as a community. And I just, honestly, I think it's just awesome. I think it's just absolutely awesome. If you don't like James and Miles, can you upload a photo? Hey, and if you have a cool, trading setup, trading desk setup, you should post one of those too. Lawrence, for example, Lawrence, don't you have like a dozen screens? Yeah, right. Is it a dozen? Yeah, Lawrence will look at 100 charts at any given time. Yeah, yeah, without a doubt, even more, right? Yeah, okay, so Marina, if you post your trades on activity, they're not real commitments, they're more like for open discussion. Right? Ideally, if you have a trade plan, post them in here under trading ideas, and it'd be like, you know, there's your committed trade, almost like a trade journal. because then they're there for antiquity, and you could go back. So like, or like, well, we'll take a look at James's here, right? So here's James's posted 5 trade plans so far. Now it'll be there for antiquity, right? We could always go back and see how James is doing, and so on and so forth, right? Okay. And of course, the other upside too, Marina, if you post this way, people can follow you, and then when you upload a new trade plan, they're actually emailed to say, hey, Marina just posted a trade plan, and they're like, oh my God, drop everything you're doing. You know, they drop their phone and run to the desk. Another Marina trade, right? So you can build your own community, Marina. So that's the way to do it. All right. So what am I doing? Oh yeah. Calendar. Marina, start by clicking the upload button, and the rest should be fairly self-explanatory. You upload an image, and then in the comments section of the image, you write in your thought process for that chart. So if you have like a 4-hour chart, a 1-hour chart, and a 15-minute chart, you can upload 3 different ones, and in each one, put a header and comments. Header to comments. Hit submit, easy peasy. All right, so let's get going on the calendar. What's going on in the world? There's a lot at 10 today, isn't there? This only says factory orders. Let's see. I thought we had more than that. All right. I have New York ISM at 9:45. I have the Investor Business Daily Economic Optimism Survey coming out at 10. Factory orders coming out at 10. Durable goods, capital goods, core durables, all coming out at 10 as well. So yeah, lots coming in over here. That's interesting because this, this is going to be impacted. Like if you're going to try to figure out this order data and capital, things like durable good orders and stuff, what you're going to also look at is retail sales, and then from retail sales you can predict that based on personal consumption and expenditures, and from that you can guess on things like wages and income, and from that you can guess based on non-farm payrolls and weekly unemployment claims. See how they all lead together? And the interesting thing is GDP includes personal consumption and expenditures. Right? And so factory orders and durable goods are not in GDP, but they lead to GDP, right? So that's why they're important, which is pretty interesting, right? And then on Wednesday, we have another dumb prediction. And that's usually a pretty good scalp. Are you guys going to be here for that? Yeah, Artem, it's not us. That's what I've said before. It's not us. The service that provides it is not providing something that works now. So I don't know. So we reinstalled the code and it's not working. It's just, yeah. So I don't know. We'll wait. We'll keep checking it. Maybe one day it'll kick in. Okay. So anyways, another dumb prediction. So you guys are going to be here for that. We'll do a new scalp. Trade balance I want to see a horrific trade balance. I want to see where the Americans are so unbelievably rich, they're buying all kinds of garbage from foreigners. Because then, by definition, everybody's rich. So we'll see, right? We'll see. You know what blows me away, and I get mad in these situations, you know, like in the situation where oil drops by 50%, but gasoline only drops by, you know, a small amount. And you're like, you know they're screwing us over for extra profit. Everyone at the pump is happy that it's 50 cents less per gallon, but you know it should be probably $1.50 less. How about this? I'm in the grocery store, you know, trying to pick up a nice bottle of European wine. I'm like, this is French. This thing should be $10 cheaper per bottle. Because I know the euro's come down. I know the dollar's gone up. I know the value of this bottle. It's normally 40 bucks. It's still 40 bucks. It should be 30 bucks. You know, it should be 29.88. Like, but it's not. And that's BS. You know what I mean? Like, that sucks. But maybe it's because they already bought it, right? So maybe next year that bottle of wine will be, you know, Chateauneuf de Pop is going to be cheap. But I have a feeling it ain't never going to be cheap. So anyways, all right, ISM services out on Wednesday, which is really, really neat. Because it gives you time to model NFP. Yeah, Zelda says Chilean wine is awesome. I tend to drink Carmenere from, you know, and it's only available from Chile. Beautiful stuff. But you know, I think I went a whole year. I'm weird like that, drinking nothing but Carmenere. But now I'm thinking, dude, it's been years since I've had a Carmenere. Yeah, put it on the to-do list. All right, so then Thursday CPI, which is important because everyone's hoping to somehow someday see inflation, right? And then the big CAD news over in here is going to be interesting. By the way, I don't know if I showed you or not. Let's go back to, I know I have it here. I did something fun last week. That article, Zelda, is at fxstreet.com. How to prepare for and trade the employment situation report. I think that page has like 300 likes. So you can search for it. All right, so look what I did. Oh, snap. Look at that. Isn't that sweet? So, for example, what I'm looking at here is this area. Okay. And this is showing me consumer price index results for the United States of America. Isn't that awesome? Boop, 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 boop. So we're down here, you know, we want to see this heading up. obviously, right? This is where we were back in whatever month that was, a year ago. So here's non-farm payrolls, and the other line, which I made blue the other day, but I guess the indicator messes with it. This is the let me do it again. Oh, great. Colors, well, it's red, so. Medium blue, let's do blue. Okay, so the blue line is the unemployment rate. So the unemployment rate in the United States is 4.7%, and our last non-farm payrolls was 38,000. And there's the history of it. Pretty neat, huh? Yeah. And there's, and I haven't checked this one for accuracy or even what the colors mean, because, you know, when you mess around with indicators, half the time they don't tell you. This, somehow, some way, is the Euro Commitment of Traders report. Yeah, the other one is headline NFP. So what is this? Dealers, asset managers, and leveraged money. Yeah, so I don't know what that is, but it looks cool. Yeah, better than one. I don't know what it means, but it's awesome. So, anyways, I threw that. And of course, the best part of this is it updates automatically, right? So when retail sales comes up, boom, I'll get updated. Okay, cool. Going back to this, so IVPMI, that's a nice CAD trade. Okay. Oh, I forgot the meeting minutes. Yeah, FOMC meeting minutes on Wednesday. Crazy, huh? Just crazy stuff. UK GDP probably overshadowed, right? Because whatever we had pre-Brexit is probably just going to be discounted as, you know, no longer valid, really, right? And then, of course, Friday, you know, the focus is going to be non-farm payrolls. Okay. And then what this weekend is one of those weekends where you have, I don't know, Chinese inflation. Yeah, that could be important. So what does that mean? That means Sunday afternoon, while all my buddies are drinking bourbon, I'm going to be at my desk making the world a better place. Or at least making money. I don't know, one of the two. So you'll put that on your calendar, right? What are you doing Sunday? Oh, dude, I'd love to come to the party, but you know, I gotta trade the Kiwi Open, and I'll probably, you know, need to be back at my charts for Tokyo and Shanghai as well. So, you know, so I'm gonna have to bail early. Well, I'm not going to watch it. It'll already be out by then. But the thing is, at, you know, 4 o'clock New York time, New Zealand comes online. That's the first set of banks to open up. And if you needed to trade this, right, or adjust your positions for it, your first opportunity is going to be Auckland Open. Oh, thank you, Artem. I really appreciate that. So yeah, so now you know what you're doing Sunday/Monday Open. That's going to be your first opportunity to get there. But that's really important stuff, man. It's really important. So notice that CAD's going to move a lot this week too. You know, and interesting because a lot of this CAD news sneaks behind U.S. news, so it's sort of like the lost trade, right? IVPMI is a very good news event to trade for CAD. And then I was, you know, Looney job report is also pretty nice. So, you know, obviously lots of Great British Pound, dollar and yen, depending on the scenario. So yen's still going to be risk on, risk off, right? So use that as your measure. Dollar is going to be dollar. So watch the index if you want, or watch for the correlation. But you know, dollar is dollar. So now that's trading. Watch for perhaps the correlation to come back in Aussie dollar. But right now it's non-correlated to gold, but it is moving based on central banking policy. CAD is correlated to commodities, so you should trade that. But then CAD's going to start having CAD-related news and could decouple from the from oil prices for a while and trade CAD as CAD. So be prepared for that. But you know that's not till what IVPMI is not even till Thursday, right? So you could trade it as oil for a couple of days, right? And then you got to switch back to trade it as a currency proper, based on Canadian economic data, right? And then, of course, non-farm payrolls. Boom, non-farm payrolls, right? Which is what is it, 122 now? Something like that. So, you know, another great trading week. I'm really looking forward to it. I am. I mean, I really am. And I'm very thankful that you're here every day. Keeps me focused and keeps me sharp. Just keeps it fun too, really. So I really appreciate your loyalty, and I can't wait to see you again tomorrow. Post some trade plans on Forex.Today and use it as an opportunity to track your trades and track your progress as an analyst, and build your own community and share ideas, you know. So take care, my friend. I'll see you again tomorrow, and of course, you know, I'll be on Forex.Today throughout the day as well. So, cheers.